In today's video, I will show you how to create a simple market scanner on the Trader Workstation platform by interactive brokers. Such a scanner can be helpful for filtering stocks or ETFs that we might want to open position on. Before we dive in, make sure to check out optionwise.eu for more content like this. You can sign up for the newsletter and grab a free ebook Options 101. It's perfect if you are just starting out. And if this video helps you out, don't forget to like, subscribe and share it with others. It really helps to grow the channel. Apart from strategies where we only trade a single instrument, most strategies require some kind of ticker list, whether that's company stocks or ETFs, on which we will open positions depending on the various conditions, signals or setups. In many cases, this list can be static, based on our own predefined selection criteria, but we can also create dynamic list called market scanner or screener. A market screener dynamically filters tickers, stocks or ETFs based on our chosen condition. There are many scanners available on the market, such as Finviz or the one built into TradingView platform. However, for option traders, these scanners often lack parameters directly tied to the options market. On the TWS platform from interactive brokers, we can build our own custom scanners that include many options-specific parameters. In a moment, I will show you how to create such a scanner, and I will walk you through an example based on the following scenario. Let's say we are using strategy based on selling spreads on assets where implied volatility is elevated, there is high options trading volume, the options are liquid. On the Trading Workstation platform, in the monitor window, click the plus sign and select Mosaic Market Scanner. In the panel on the right, you can choose from predefined scanners or custom scanners you have created earlier. In our case, we will click Create New Custom Scan. In the next window, we enter a name for the new scanner, let's say Stock High IV. Below we choose the product type, such as stocks or ETFs. I will select stock. Region, leave it as US. Exchange, leave as all. Instrument type or sector, leave unchanged. Click Next. Now we reach the most interesting part. This is where we set up the columns that will appear in the scanner, which we can preview live in the panel on the right. First, I will add a column for the company name. To add that, click Add Field, then under Financial Instrument Description, select Company Name. Click outside the list to close it. Now you can drag the new field to place it wherever you like to appear in the scanner. You will see all changes reflected live on the right. Our strategy calls for elevated implied volatility, so I will now add more option-specific data fields. From the menu, choose Options and start by adding 52-week IV percentile, 52-week IV rank. To filter for liquid options, add Option Open Interest, Option Volume, also add Implied Volatility. Now, here is an important point. Fields that have filter button can be used to restrict which results the scanner shows. For example, I will filter by Option Open Interest and set the minimum value to 100,000. Notice that the scanner updates in real time after every change. We have now filtered for the most liquid option markets. To include underlyings with low implied volatility, I will use the filter on IV percentile and enter 0.5, that's 50%. Once the scanner is set up, click Save. By default, the results are sorted alphabetically, which isn't very useful. To change that, click Edit Scanner in the upper right corner and choose to sort by open interest from highest to lowest. Now the results are sorted and we can easily find the most liquid underlyings. Note, the list includes both stocks and ETFs. Aside from Nvidia, the top entries are mostly ETF. You will also see the IV percentile and IV rank columns, which we can use to assess elevated volatility. In some cases, there are significant discrepancies. For example, IV percentile may indicate high volatility, while IV rank shows low value. I will explain this in more detail in an upcoming blog post. Now I will quickly create another market scanner, this time to filter only ETFs. Again, I go to Mosaic Market Scanner, click Create New, add name, this time ETF High IV. In the settings below, I will only change the product type to ETF. Just like before, I will add following data fields: IV percentile, IV rank, option volume, open interest, implied volatility. I will filter for elevated implied volatility using the IV percentile and remove ETFs with illiquid options market. Finally, I will sort the results. As we can see, we now have a similar scanner, but this one includes only ETFs. Earlier I mentioned that we also want to look for declining volatility. To evaluate that, we can start by adding a few more fields. Click Edit Scanner, then Add Field. From the list select Closing Implied Volatility, Option IV Change. Now we can assess the current IV, the previous IV, and the change between them. Of course, this is a fairly basic method, a single data point that doesn't make a trend, but it's a good starting point. If we want to take a closer look at our list, we can export the scanner results to a CSV file and, for example, import just the ticker list into TradingView to use additional indicators there. You might ask, why export anything to TradingView when the TWS chart window already integrates it? Well, the charting panel in TWS doesn't support all indicators, especially community-created scripts, and it doesn't allow editing indicators in PineScript. That's why TradingView can still be useful. To export the scanner results, click on any cell on the scanner, scroll to the bottom and select Export Page Content. If you find this video helpful, give it a like, subscribe to the channel and share it with someone who's starting their journey with options. For more content like this, frameworks and examples, visit the blog at optionwise.eu. You will find articles, tools and free resources to help you build clarity and structure in your trading.